Hi, good morning, everyone. Welcome back to Eldercare's weekly life training. I am Adrienne,
And I'm Brent.
and we're super excited to have you with us this morning. It's been a minute since we've kind of had an annuity topic for this series that we do, so very excited to have Athene with us, one of the great annuity carriers out there, to talk to us about their products and just selling annuities in general. I know most of you on here are selling Medicare products. So just a little background for you, Jake. And for everyone on here, we have a mixture of agents. We have some already selling annuities, maybe not with us. Maybe we'll inspire them to write the annuities with us.
Yep.
And then we also have a lot of Medicare agents who have not made that, life-changing leap in selling annuities. So hopefully this will show them how easy it is and how we are all here to help them do that. So without further ado, I would like to introduce our special guest, Jake with Athene. Thank you so much for being here with us.
Of course, yeah, I appreciate the time, everybody. And, hopefully today I can talk to you a little bit about some things that not only that you think you can uncover within your own practice and the clients that you guys work with, but also, help them retire better in terms of, being able to help save their retirement savings or guarantee that lifetime income for everybody as well, too. And so what I'm going to do here is share my screen.
Yep, you should be able to share your screen now. And we always want this to be more of a conversation instead of a presentation. So please, everyone on here, if you have questions, please comment them. Let us know. Are you already selling annuities? Do you want to sell annuities? Kind of communicate with us your stance on annuities. That way we know what's going on.
And definitely, if you have any questions over this information, we'd love to get those answered for you, because you become a lot more confident when you have a little bit more inside knowledge, or just a direct line of contact when it comes to answering those questions. So you're prepared and you're ready to go. Preparation's everything when it comes to these deals, because there's a lot of questions that come around it. And so you want to be able to answer those questions, or at least give good feedback to where they know that you're going to come up with something that's going to be really good and going to answer that question its entirety.
Yes, absolutely.
Yep, exactly. And that's exactly what we're here to do, is going to be able to help those clients retire better. And I think this presentation is going to be able to kind of integrate some solutions that we offer here, whether it be guaranteed lifetime income or that strong accumulation and growth potential, while still protecting your clients' retirement assets in there. And that's going to be a very important thing going forward within our economy. So, first things first, I'm going to talk a little bit about Athene today. Some people might not know too much about us as a carrier, but within that, everybody can see my PowerPoint screen too, by the way, correct?
Yes.
Yep.
Okay, perfect. Yep. So, to start, these are going to be some numbers that I think we should touch on every time we talk about Athene. And that's going to be the financial strength rating numbers here. And as you can see, recently in 2022, they've all been upgraded. And so that just goes to speak that your client yourself should have some peace of mind putting funds into a company like Athene with the financial strength, the continuous growth that we have, and of course the increased ratings that are continuing to happen each year and year out. As well as that, for insurance carriers and offering the correct products and beneficial products for your client's retirement and their goals and objectives, capital is going to be key. So having that access to capital and being able to provide those guaranteed solutions for those higher and better performing products is going to be the key.
So your audio is fading in and out.
Interesting.
It always tends to happen when you most need it.
Yeah, exactly, right? Does this work a little bit better?
Yeah.
Okay, I'm going to try.
I have a question of how long has Athene been?
All right, well, so with that, I'm kind of talking a little bit about capital being key in terms of the annuities and being able to offer the right products for your clients. We have a couple of different avenues of that profit and receiving that capital there from our retail side, as well as that we just have a recent merger with our parent company Apollo in January of 2022. So that private equity firm Apollo is going to be able to provide us capital. We're a long-term plan for their growth opportunities as a private equity fund helping their investors, and we're going to be using their capital to increase our products for your clients, continuing to capture some of that market share, grow as the Fixed-Index Annuity Corporation here. Then as well back, as you can see, we're the #1 in a couple of different spaces here on the retail side of things, whether that just be fixed index annuity provider, which should be 3 years back to back running now in terms of the top carrier of fixed index annuities. And as well as that, we have something called our pension risk transfer team, to where we will buy old books of pensions off of different corporations who want that debt balance off of their books, and we'll end up paying for those pension risk transfers, make a pretty penny doing so. So having that, extra resources of capital inflowing is going to be able to help us continue to have that financial strength and offer very competitive products for your clients. So here's just some of the awards lately that we've won, including Best Carrier Award, Carrier Hedging Team of the Year, which is going to be our actuaries kind of taking a look at those different options for our indexes, having the opportunity to, offer these high participation rates, these premium bonuses, all these product features that we have. And then the Fixed Index Annuity of the Year in 2019 for the ability, and then the 2021 Performance Elite, and 2022 our BCA. So here's a little bit about the Athene company timeline. As you can see, it's, inception in 2009, I should say. So it's a fairly young company, but we're continuing to grow. And so capturing the market space in the fixed index annuity, and last year kind of taking over in the fixed annuity space a little bit too, has gained us that market share, able to continue to grow. And I know a lot of annuity carriers. Sorry. Yep.
So Athene started doing annuities in 2009 because we had that question.
Yep, so we did, and we took over Aviva. So they used to be an old annuity carrier, and we had bought an Aviva and taken their book of business over.
Okay, all right,
Yep.
very good to know. And I don't know if, because your audio is not the best.
I'm sorry. Should I
okay.
try switching to like my AirPods?
Well, I was gonna ask if that headset had like an actual handset, like if you could just, or if it's only a headset.
Plugging it back in, and no, because it like.
I mean, it's as long as the agents say it's fine.
AirPods tend to work pretty good, in my experience.
Maybe if we get some feedback from the agents, if the audio is okay on their end, or if it's not okay.
Is it a little bit better now?
Yeah, they're saying the audio is not okay.
Interesting.
It's just like it's fine 1 minute and then like it fades out, and then it's fine, fades out.
AirPods to the rescue.
I'm gonna try something really quick. I'm not sure how I'm going to be able to fix the audio in the presentation, if that's something that's okay.
Yeah.
Let's see here. Any chance that got any better after I unmuted myself?
I mean, it sounds good right now. Yeah.
Okay.
It's just
so maybe you just want to give me a heads up when the audio isn't working, and I can just make sure to answer any questions or go back to it. But, so I'll kind of expedite through some of these slides here talking about Athene. This is where I'm going to be here in Muskegon, Iowa, at our campus here. My partner, Jay Rosenkrantz, he lives in Virginia. He's going to be the external partner of our territory traveling around. And so with that as well, what we like to do here at Athene is offer some creative product solutions, including some income solutions that have that offered guaranteed lifetime income on there, the accumulation solutions, so they can still participate in that upside growth while still being protected. And of course, a large priority for retirees nowadays, making sure that they have that legacy planning and taking care of their loved ones in case of that unfortunate time of death of theirs. Then obviously that protection. And that's going to be key with all of our annuities here, is going to be that protection, making sure that those retirement assets are safe from any downside market risk, and being able to participate in that upside growth as well.
Talked a little bit about our community involvement, just kind of the culture that we have here at Athene. And so, I was top workplaces 8 years running. All of our volunteer hours, and then the raised donations for United Way just kind of speaks on the culture that we have here at Athene that we're continuing to build as we continue to grow. So, I'm going to try and go a little bit into the fixed index annuity part of things here, just to kind of give an idea of where we can step in as financial professionals, continue to build your book of business, and ultimately help the clients retire better, right? And so here's a couple of numbers that I like to represent here, in that over 3/4 of Americans actually have no formal retirement plan. And so, kind of hearing that, that's a pretty alarming statistic. And as, life expectancy continues to increase, healthcare costs continue to rise. We're seeing inflation right now, and the economy is kind of, up in the air about where it's going to be going in the future. We need to step in as those financial professionals, continue to help educate and promote this, financial awareness of saving up for retirement. And so including that, 55% of Americans, even those ones who have retirement plans set up, they're worried that they're going to outlive those retirement savings. And so utilizing these fixed index annuities with those guaranteed lifetime income riders can help stop that peace of mind, make sure that those clients, those 55%, aren't worried anymore, and that they're going to be able to get those consistent lifetime paychecks. So that's where we can step in.
That just shows me like there's plenty of leads for annuities. That's what that's telling me.
Yep, exactly. And so no matter what kind of practice you're in, whether it be that final expense or the mortgage protection or Medicare right now, if you see a lump sum of, amount of money that's not being touched, or if it's in a 401k and it's subject to market risk, that might be something to help utilize and help your clients protect those assets. If they have a previous annuity that they've already been in the past and it's not underperforming compared to today's products, we have solutions that offer premium bonuses to help suitability wise bring it over. The client actually might come out on top with our premium bonuses. And then as well as that, just being able to have this retirement is going to be something to where you guys can grow that business using those leads and those referrals. And that's how, you can continue to do that. And so, this is just a couple of things here. So back to the fixed index annuities, it's going to be growth that's protected. So it's going to have that guaranteed lifetime income in there. It's going to be protected from any of those stock market downturns. But with that as well, we do understand the access to money and the priority for those clients who need those funds for those what if situations per se. And so when things do change, we have that opportunity for our products to offer clients that penalty-free withdrawal amount. So then they can always have that peace of mind as well too of if those situations do happen, they're not going to get penalized from their annuity funds here with this withdrawal. And so that, it grows tax deferred. It's going to be huge in terms of an advantage in terms of the accumulation and growth potential there. And then some additional features that we'll talk about within the two products here in a little bit. So, right here is where we like to stand in terms of the annuity spectrum, kind of right in the middle between risk and reward. So your clients are still going to be, zero is your hero. You'll never lose funds in the fixed index annuity, where you're still participating in that upside growth. And so it's kind of a great vehicle for all sorts of economic climates right now. Whereas, in a recession, you're going to be protected. But in a growth market, you're still going to be participating in that upside growth on there. And so these products that we offer with the high participation rates of those indexes are always going to be around. And so no matter what kind of economy we're in, they're always going to be useful as well. And just that protection aspect speaks volumes for the comfortability and the peace of mind for your clients in that age. So I've talked a lot about, participation rates. And here's a pretty good graphic of kind of what that participation rate means. And so say these are an underlying index that you have allocated in your annuity contract. It could either go up or down depending on that annual point-to-point year of when you start that contract. But zero is going to always be your hero. So if that index value ends up going down, your account is not going to lose any of those funds. It's going to stay protected from that initial premium there. But it does go up, like this third column here, and you're participating in that dark navy blue. That's what your growth is going to be. You're participating in that upside growth. And later on, when we show some specific participation rates, you're going to see that a lot of them are extremely high right now, and that you could be even participating in over 100% of an index performance's growth. And so that's pretty exciting in terms of staying protected, but still also receiving that growth from those funds on something that might not even be performing at an extensive level, but you have very high participation rate. So with that as well, locking in these gains in the fixed index annuity is going to be a huge component of how you can build that, still stay that accumulation throughout the contract life. So at each contract anniversary, those interest credits are kind of locked in on those gains, whether it be a 1 year or a 2 year point to point. And then as well as that, you're just going to be able to lock in those gains, protect from those market downturns. So say your first contract anniversary, you saw an interest credit, you saw gain in those indexes. The next year, those indexes fell, and your client's still going to be protected from that bounce back. They're going to be locked in those initial gains there. So that's good to know going forward. And then we're going to talk about a specific product here with our Cent Pro 10 bonus. So this is going to be one of those products that goes back to that 55% of Americans feel they're going to outlive those retirement savings. This is a guaranteed income solution for all clients. And there's actually a couple of different flexibility in terms of the features here that can make it useful for all different client types looking for income. So I'll dive deeper into that as well too. So
before you go into the specific product, we did have someone with a question, and I don't know if this is going to be for all your products or if it varies per product, but William was asking if the annuitant dies, where does the assets remaining go? And he asked, are there any beneficiaries involved? So I don't know if that's specific to this product or all products or.
Yep. So with that, in terms of with this product, if say the spouse is the sole primary beneficiary, the spouse is actually going to have the option for spousal continuation on those lifetime income solutions. Or if the beneficiaries are say just the children of the client or the grandchildren, they're going to receive a death benefit payout, which is going to be the greater sum of the accumulated value or just the minimum guaranteed contract value, whichever is greater. So there's always going to be a death benefit on these. And with our income solutions, spousal continuation is going to be available for those spouses if they're the primary beneficiary on there as well. Yep. Great question. And continue to just kind of toss those out when needed. Appreciate that.
Okay.
And so this one, yep. Do you have any more right now?
He just asked if it's taxed.
It depends on kind of the qualification of the initial premium. So if it's non-qualified funds, you've already paid taxes on them. At that point, when you disperse, it's just going to be based on your income tax level bracket. And then obviously with the qualified funds, those are going to be taxed on both the growth and the disbursements as well, as you haven't paid any taxes on those as well. But for tax questions, I'd probably result to a tax professional on those, as that's just kind of a little bit more easy and they understand that a lot more. So,
okay.
And with this, product, it does have that flexibility, as I was saying. And so part of the flexibility is going to be those first two boxes you see here on this slide, including the guaranteed and stacked roll-up options. So this is going to be two different options in terms of the growth in that income base. And so, having that growth in that income base, the flexibility within there is going to be something that, based on your client's preferences or when they need that income, this is going to be a decision that you guys can make going forward. And as well as that, the payout options on there is going to be another thing that you and your client can have a conversation about. You can learn a little bit more about that client, their risk ratio, and kind of what they were feeling in terms of moving forward with the economy. As well as that, there's some enhanced features we can talk about here in a second. But for the two different accumulation phases or options that you can do, we have option number 1 and option number 2. Super creative names. But I just wanted to make sure option number 1 is going to be kind of geared towards those who need income sooner rather than later. And so, this is to me those clients who don't have that formal retirement plan set up yet, but are still trying to get that guaranteed lifetime income. And so what we do is for those clients who, are setting this up later in their life, they may be retiring very soon. We're going to give them an income-based bonus of 25%. So if it's a $100,000 premium, your income base is day one, $125,000. With that as well, each year they defer that lifetime income. They're going to get a 10% simple interest roll-up in that income base. So each year, $10,000 off an initial $100,000 premium, you're going to go into that income base, which is going to essentially determine those income paychecks once they start that lifetime income rider. Now, option number 2, this is going to be geared towards those clients who may have a retirement plan set up, or they're looking for income down the road, right? They have a little bit more time to defer that lifetime income paycheck. And so what it does is it does lower that initial bonus in there, but it increases the accumulation potential at that 200% stacking percentage. And so essentially what that means is, say your index allocations you're in performed an increase 10% in 1 year, you're actually going to see 200% of that growth into your income base. And so while that continues to grow and you receive that higher accumulation potential, it's just going to only continue to build up that income base and reward your client for not taking out that income sooner and then kind of deferring the lifetime income as well. So that's kind of the differences there in between clients who are looking for income sooner rather than later, or those clients who can defer a couple of years as well. And so here's kind of just a guaranteed graphic on that simple interest for option number 1 with that guaranteed growth. Just going to have that immediate 25% bonus on a $100,000 policy. After 5 years, you're going to see $50,000 in that income base, $10,000 each year. And then after that 10-year deferral, there'll be another $100,000 based off $10,000 each year put into that income base there. And so as well, you can see that, the longer you defer, the higher your income payment's going to be. It also just goes hand in hand with the payout percentage factors as well. As the older you get, the higher your payout percentage factor will be. So,
makes sense. So that makes sense.
Yep, exactly. And so we talked about the 2 different accumulation ways on this, and then now we're going to talk about the 3 different payout options on this one. And so we do have our level income option. And so this is when the client starts to taking out those lifetime income paychecks. That level option is just going to be the same consistent paycheck. They know exactly what they're going to be getting year in, year out, kind of giving them that peace of mind and consistency. Whereas the inflation adjusted, this is going to follow the consumer price index. And with that, it's going to be for those clients who are maybe a little bit worried about living longer in retirement, not keeping up with inflation within those income payments. And so it's going to start at a little bit lower of an income value, but continue to rise as inflation does continue to rise too as well. And so, that's one that's starting to be a little bit more popular with inflation kind of on the rise there for a little bit. And then now, with the earnings index income payout option, this is my favorite one to talk about because it follows the actual indexes you're allocated in. And so has that potential to continue to increase based off the index allocation that you have in their performances. And so if you had an index that, earns 5% the 1 year, you're going to see a 5% increase in terms of your guaranteed lifetime income paycheck too as well. And so that's a nice one too for those clients who are thinking about living longer. They want that potential with those indexes. Maybe they're optimistic about the economy moving forward. So, and here's that example there. So say they're in the earnings index payout option. Their last year's payment was $20,000. They saw 5% interest credited in there. Their $20,000 income payment is now $21,000 for the next year and years moving forward. So they get a new increase on that interest credit. So as you can see here are the payout percentage factors. So older you get, higher or more you're going to get paid out of that income base. And it's going to be 0.1% each year. So half a percentage every 5 years in terms of increasing that payout options. And then with that, we do have that 10% free withdrawals per year on here for those kind of what if situations for your clients. And then I think we're going to go into the state availability here. Oh, yep. So lifetime income actually has an opportunity for those clients who might be worried about being confined to a qualified care facility, or even some clients who just are worried about that in general. This is going to be something to where their lifetime income paycheck will actually double if all 5 of these things have been qualified for them and kind of checked off and they're in that qualified care facility with the higher expenses. This is going to be able for them to have that extra income to be able to pay for those higher expenses. So another great value add in terms of the sale with the client there.
Yeah, you see a lot of the challenges in those homes.
What was that there?
I said you start to see a lot of the challenges when they get into those assisted living homes. So that's really good.
Yep.
To project.
Yep, exactly. And so on that one, I do want to make sure that, so on the bottom of this page, it does talk a little bit about those confinement and terminal illness waivers. They're not available in every state. So just kind of make sure about that when you're speaking with clients there. But this would be that state availability. New York isn't very fun to write some fixed index annuities with. They generally don't like to play ball in that area. And then the only difference here is Indiana is going to be a 74 maximum age limit, whereas 80 everywhere else. And so I was talking about participation rates earlier. here's just an example on the Ascent Pro 10 bonus of some of the participation rates on these indexes. So as you can see, you see a couple there that are over 100%. So let's just take that 160% for an example. You know, if that received in 2 years 10% interest crediting, you're going to actually see 16% growth on that because you're participating in 160% of that upside growth. So that just goes to show kind of our actuaries, why we're winning that best carrier and best hedging team of the year. But this isn't even a growth and accumulation oriented solution. This is meant for guaranteed lifetime income. So, you know, this one does come with a premium bonus, cash value of 3% day one. So that's going to be a good value add too for your clients. But it does have that built-in rider charge at 1% due to the ability to take out that income in year one. So that is the availability there. And if anybody has any questions, here's just a couple of marketing pieces on this product itself, which you can find on the Athene website, Athene Connect. But then I will move on to our accumulation solution really quickly here, unless anybody has any questions.
Just that, I think you answered this already when you were talking about that previous product, but it was, Paxton asked, is that current product a deferred annuity? I think he said the word twice, deferred annuity, deferred. I don't know if I'm saying that right.
So it is an annuity that can be turned on right away. So it can be, that lifetime income it can be issued, and then you can receive that lifetime income paycheck within the next month. So it doesn't have to have any deferral years on there, but it does reward your client for those years of deferral, whether it be that roll-up interest in the income base or that 200% stacking percentage. It's not going to be a deferred income solution. It can almost be a guaranteed right away income solution as well.
Okay.
Does that kind of answer that question?
Yeah, yes. Or for me it did. I hope it
Perfect.
did.
All right.
And then William said he's never sold one, but he wants to. That's awesome, William. We're excited to help you with that. Marie asked if it's backed by BOA.
Like Bank of America.
I guess. Marie, is that what
So
you
we
mean?
do have indexes.
Okay.
Yep. I mean, we do have indexes that are Bank of America. They run those indexes there. And so I'll talk a little bit about those in our growth-oriented solution, the Performance Elite, as that's going to be kind of where the indexes and the participation rates and the premium bonuses come into play. So I'll move on, and I'll be able to go through this one pretty quickly as, this is our top-selling solution here. I think it's something that you guys can all utilize, especially for those clients with orphan 401ks, underperforming annuities from the past. If they have a lump sum of money in their checking and savings that's not doing anything in terms of growth, this is going to be an opportunity to where your clients can see that growth potential and still be protected. And so with that comes with a premium bonus at issue, which is going to be a day one cash value. So day one accumulation is always a great value add to your clients in the sale right there. The market leading crediting rate is talking about our participation rates that we offer here. And then as well as that, we have a plus version on the Performance Elite. So we have a Performance Elite 7, 10, and 15. And we have a 7 plus, and a 7, 10, or a 7 plus, 10 plus, and a 15 plus. And so that plus version is going to offer enhanced liquidity on there, higher premium bonus, and a couple of other features we'll touch on really quickly. And with that as well, you do have those clients who are a little bit more optimistic about the economy or certain indexes moving forward. They may want to take a little bit more risk in terms of their fixed index annuity products because they know they can't lose any money. So if they want to participate in more of that upside growth, they can actually have an optional strategy charge of 1.25%, which is going to only increase that participation rate moving forward for them. So if they see gains in that index, they're going to be buying up on that participation, receiving those higher gains in their account value moving forward. So this is an optional thing. But at the end of that withdrawal charge period, whether it be the Performance Elite 7 after 7 years or the 10 after 10 years, if you and the client had actually lost money paying this optional strategy charge, we're going to have a one-time strategy charge credit to true you back up to that whole premium that your client put in. So really good kind of value add there. But then here's the premium bonuses I was talking about the day one accumulation. So as you can see on the left side, it is the base version right here. And on the right side is going to be the plus version. for the 7, 10, and the 15. So as you can see, that 7 base version does not have any premium bonus on there. But as you move to the plus version and then the 10 and the 15, all those solutions do have premium bonuses. And so, the 16% premium bonus in most states on our Performance Elite 10, in terms of a just cash value, day one, 16% accumulation. It's going to be a great sale in terms of just the day one accumulation, moving out of those older products. Say they lost funds in their 401k in the last year or two. They're trying to recoup some of those losses. This is going to be something to help gain back and also protect their assets moving forward. And so here's what I was talking about a little bit with those index options. And so when it comes to these index options, I like to not only preach diversification amongst 3 different index options, so you're not putting all of your eggs into one basket. So you have that chance of receiving some sort of interest credit no matter what. But then also I like to stagger my 1 and 2 year point to points. And so say I had 50% in a 1 year point to point, 50% in a 2 year point to point. If I was able to do that and I meet with my client after 1 contract anniversary, I'm able to reallocate that 50% to 1 year point to point. At that point, if I put them into a 2 year point to point, they're going to get higher participation rates. And that following year, their original 2 year point to point is now going to be up for reallocation. It kind of starts that staggering method to where each year you're still able to sit down with your client, talk to them about the interest credit they had, reallocate, have that flexibility to move funds around, but also still stay in those 2 year point to points with higher participation rates and kind of just have that alternating each year meeting with your client. So that's kind of a sales concept I like to touch on a little bit. As you can see here, any of these indexes where it says participation, that means that there's no cap on that performance. You're just participating in that growth there. Whereas the S&P 500, which is going to be the most notable index on here, does have a cap on there. And then we do have a fixed strategy for a 1 year guarantee on here as well too. So for those clients who might not think the economy or any indexes are going to perform well, they just want to take a fixed rate of return, they can do that as well on these buckets. So here's just some of the participation rates. As you can see, they're quite a bit higher than that Cent Pro 10 bonus. And that's just because this is going to be that growth and accumulation oriented solution. So, some of these index options here, there's a lot of value adds within them. I can try and run through them really quickly here. Now, the BNP is going to be an index to where it's pretty consistent in terms of it's got a lot of different sub indices in there. The global index has bonds in there, so it has some of those consistent returns. I'd say it's one of our more consistent indexes too in terms of rewards. I like to compare it or analyze, or an analogy for it would be like somebody who always gets on base in baseball. So they might not hit a home run every time, but they're going to be getting on base. And so having that consistency in your client's portfolio is going to be something moving forward to where you can diversify and say use the NASDAQ FC index, which that NASDAQ FC is going to follow the NASDAQ 100. And that FC stands for Fast Convergence Technology. So they're actually able to intraday trade in and out of cash or in and out of the NASDAQ 100. So they can manage that downside volatility while still maximizing that investment on the upside growth on that NASDAQ 100. And so that's a Fast Convergence technology provides kind of a really high growth potential. And then that AI-powered U.S. equity index is another one I use there, which is going to be ran by IBM Watson. It's going to be artificial intelligence. It's going to be all U.S. equity in there. And so, in 2020 with the pandemic, the AI U.S. powered equity index actually had a terrific year using IBM Watson, kind of taking that past market trends, trying to analyze future market, data going forward. And, I think that the artificial intelligence index is going to be something that catches on here pretty quickly. And just a couple of value add indexes there to go over those quickly. Here's going to be the Performance Elite participation rates. On the left side, you'll see the no charge versus the right side with that optional strategy charge, which you can go in and out of, by the way. I don't know if I clarified that. So you don't have to be necessarily stuck in one of the 2 different options, the entire length of the contract. So that's something to know there. Here's a performance. Yep.
Is that something that the agent changes, or is it something that the client himself that can change?
Yep, great question. So, say we had a contract issue today, And then 11 months from now, client will receive a letter talking about the reallocation opportunity, what is available for reallocation, and what options there are for it. And at that point, you just need to return that by that 12-month contract anniversary. So then once that new year starts, you're in that index that, usually the client talks to the producer about it, and they kind of bounce ideas off of each other. But as well as that, it's just going to be something to where you guys will be able to have that conversation kind of your own. But I can always be there to inform about any index, just not to the client, right? So,
Are you going to be going
we're going
over?
to talk.
Are you going to be going over
What
the
was that?
minimum participation rates and the minimum or the required investments to lock in for 3 years? Are you going to go over all that?
So the required minimum to lock in for 3 years. What do you mean by that one there? Is this in the chat? Should I be looking at that?
I don't think that you can see it, but Marie just asked, what is the required investment to lock in for 3 years?
So like initial investment to ensure that they get a consistent rate for 3 years is what it looks like. 100K is their
Okay.
example.
So we do have a fixed rate opportunity for, it's going to be a product called our max rate solution. And with that, it's going to be for the 3 year. I'm going to pull that up really quickly right here. For the 3 year on the guaranteed option, $100,000 policy is going to get you 4.6% guaranteed return rate. And so that's on our max rate solution, a completely different product than we've talked about today. This is just going to be our fixed annuity, as we don't have any 3 year solutions for any of our fixed index products. Our shortest is going to be the 7 year on the Performance Elite, or else we have our max rate solutions that offer the guaranteed withdrawal. My coat fell, coworker help, and then the 3, 5, and 7 year on the guaranteed fixed rate solutions. So that's where we're at. And let's see, what was the other question on that one? I'm sorry.
She had asked, what is the minimum participation rate?
Okay, so the minimum participation rate, that's going to be kind of tough because it changes each index on there. But I do have a pretty good marketing material piece that I can maybe send you guys after this meeting about our renewal rates on the Performance Elite. Kind of shows that, they stay at a consistent rate in terms of being pretty high out there, and making sure that we renew them at a favorable rate for the client. So it's not like we're taking their initial premium and then 2 years later completely slashing, the participation rates. No, we're going to keep it consistent with that. I'm pretty sure the statistic is like 87 or 86% have remained within the same 10% that they initially were in or unchanged. So that goes to show that the minimum participation rates are going to be there, still going to be very competitive moving forward. And then on the screen, you can see a little bit about that one-time credit I talked about for the optional strategy charge. And there's a good visual of it, just saying that, hey, $100,000 premium, I paid $15,000 in these optional strategy charges. $13,000 was only credited back. We're going to give you a credit of $2,000 to true you back up to whole. So that kind of goes to that description there for those clients who are looking have that more accumulation potential, I should say. And then with that, I'm going to go to the state availability and then my contact information. And I'm going to stop here first. Sorry. So this goes to that enhanced liquidity. Yeah. So this is going to be something that also has those features and benefits on the plus versus that base version. So the base version is going to be on top here, and that plus version has 10% free withdrawal starting in year 1, whereas the base version has 5% free withdrawal starting in year 2. So as you can see, your client's going to get the enhanced liquidity there. They're going to get a higher premium bonus. And then they also have a return of premium feature as well after that 4th contract year. And then the 20% rollover free withdrawals is actually a great slide that shows kind of visually what that means going forward. I just touched on all of that. The plus version does have a 0.95% annual rider charge on there. But again, that does increase the liquidity your clients get. The premium bonus that they get goes from 10 to 16% on the Performance Elite 10 in most states. And then the return of premium feature as well. And so here are like those rollover free withdrawals. So say your client didn't take out any withdrawals in the year prior, they're actually eligible to take up to 20% the next year. Those are kind of for those what if situations, right? If their whole goal is to be able to continue to grow this safely, they probably shouldn't be taking out 20% withdrawals in here, but this gives them the opportunity if they need to. And so just kind of having that there for making sure they won't get penalized on this is a good value add for the sale as well. And so we talked a little bit about,
really fast. So I've got a question from William, and said, could there be additional investments contributed to the product? So I'm guessing.
Great question. And so these are going to be single premium lump sum annuities. So the minimum purchase is going to be $10,000 in most states. And so that's where you're looking for kind of those orphan 401k rollovers, any of those large lump sums in checking or savings accounts, or of course, any of those previous annuities that might not be performing well or even matching with their financial objectives right now. That's where we can look and see what these opportunities are here at Athene to help them retire based off their objectives right now.
Essentially, have a really good conversation at the beginning of it when you initiate.
Yep, exactly. Yep. And so let's see here. I did talk a little bit about, so I want to mention the Performance Elite 7. So it does have 10% premium or free withdrawals in year one on the base version. It just does not come with a premium bonus. So that's a little bit different than the 10 and the 15, as the 10 and the 15 do come with a premium bonus, but they just get the 5% starting in year two for those withdrawals. So a little bit different there. But again, high premium bonus, market leading participation rates, and of course that powerful liquidity in there as well. It's just going to be the state availabilities. I'm going to kind of skip through the 7 and the 10 just because they're pretty normal. 78 most states, 74 in Indiana. But for the Performance Elite 15 is where it gets a little bit more crazy, and that's going to be the state availability there. So kind of always take a look at the Performance Elite 15 of where that client is, make sure it's going to be available for them and their age. So something to take a note of. And then, with that as well, if you need any of these marketing materials, I know I didn't go over them today, but please don't hesitate to reach out to me right there. And I'd be happy to assist in terms of getting those marketing materials out, clarifying any of these features and benefits, talking about other solutions or any potential clients you guys all have.
Yeah, and so we had quite a few questions about these slides and if there's a way that they can get a copy of them. Is that?
Yeah.
Can we provide these agents a copy of these slides? I know we went pretty fast and we try to keep these trainings pretty quick and just full of just the information that you need, but we understand that everyone's different and it's a lot easier to be able to go back and read it yourself.
Of course. Yep. And I'll just be able to send this on over to you and then can you forward it there from that point?
Yeah, absolutely. If you do have further questions, everyone, you can put them in the comments. I know we're a little over time, but we appreciate you, staying on. I know we had a little bit of sound difficulty at the beginning, but we worked through it. Marie did ask, what kind of annual fees are clients looking at potentially?
Yep, great question. So on the first product to talk about today with the Ascent Pro 10 bonus, it's going to be a 1% annual rider charge on there. And on the Performance Elite, the accumulation focused one, the base version is going to be completely no fee. And then that plus version comes with a 0.95% annual rider charge on there. So the 0.95 comes with a higher premium bonus, the liquidity, and the return of premium feature on there. Yep.
I don't know if we answered or asked this question, but Jay had asked, what is the minimum rollover amount for a deferred 7-year plan?
So a deferred 7-year plan. So if there's any surrender charges on there, we're going to need to make sure that it's not higher than 2%. So we're going to need to make sure that for that plan that they're going to be rolling over, we don't have a minimum amount there. We just have to make sure that the suitability in terms of surrender charges being incurred on there isn't going to be higher than a 2%. In most states, we do have 3 states that are no loss states. So if they're replacing one of those states, we'd have to use a premium bonus to offset those surrender charges on there. But there shouldn't be any minimum amount other than that $10,000 in terms of any rollover withdrawals from previous annuities. Or deferred plans, I should say. Sorry. Yeah.
Just want to protect that bonus transfer. make sure it equals out essentially.
Exactly. So that's why the premium bonus is used as well too, to offset some of those surrender charges. So it's something that we could take on here at Athene. But of course, also make sure that your client can receive that day one accumulation, even switch products and come out on top even with the surrender charge. Yep.
That's the goal.
Yeah, and then I think I missed this one earlier. I think it was on that first product we talked about. Paxton had asked, does option 2 have a cost for 200%?
So does it have a what for 200%?
A cost.
So I think there
Nope.
was
So that one's,
go ahead.
yeah. So no, those two different options there are going to be based off client preference. And so kind of like you guys' discussion with the client of when they're looking to take out income should influence whether you use option 1 or option 2. Again, option 2 with that 200% stacking is going to give them that longer term accumulation potential with the 200% stacking percentage, whereas option number 1 with the higher income based bonus day one and the simple interest roll up each year higher, that's going to give them that kind of day one accumulation, whereas option number 2 is for those who can defer that lifetime income a little bit longer.
Okay. All right. I think that's all the questions I see coming through. Definitely want all of you on this training. If you're not already contracted with Athene, please contact Brent. He's going to be following up with you to see if you want to get set up for being able to offer this product to your clients.
Remember, there's a ton of different options. So no matter where they're coming from or what they're looking to achieve, there's a lot of products out there that can help them. We've briefed through a pretty good amount of them and saw kind of the benefits of them. So you know that there's obviously some room for growth for all your clients. So just being able to put them with a ton of options, give them a ton of options.
Yes. Yeah.
A lot of looks.
I feel like those agents that are already selling annuities are just, they always say, you just have to ask the question. Like
Right.
That's literally the first step in being able to sell annuities is just asking the question. And William did have one more question. And he said, either option has a beneficiary. So I think maybe both products he's asking, do they have a beneficiary?
Yep, that's correct. Yeah, so I didn't touch on the death benefit of either one of them that hard, sorry, but both of them will have a death benefit on there. It's going to be either that greater of the accumulated value or the minimum guaranteed contract value, just depending on where that is at the time. But all of our fixed index annuities are going to have that death benefit on there.
Yep. And I love that Natasha asked us.
What questions do I ask?
What question do we ask? So everyone kind of ask it different.
Right. I also think when we had our webinar a couple weeks ago and we were talking about legacy safeguard, it's almost when they go through and they have those different questions about assets and all those different things, those all will generate some type of a conversation that leads into an annuity, right? You're uncovering what type of money they have just kind of sitting around, like you said earlier, Jake. If it's in a bank, it's not doing very much of anything. And so just showing them, hey, listen, with $10,000, you can look at an option like, this, right? So whatever plan you choose to go with. But I think it's uncovering where they have a lot of their free money and a lot of assets just kind of sitting, if that. Because money in banks at these days are not making any type of growth at all. So I won't go too far into that.
The ultimate question, Jake? Do you have like the ultimate?
Jeremy McGuire?
No, I like to, I've heard successful producers in the past kind of have their clients just kind of explain to them their dream retirement. And kind of at that point, it allows them to ask those questions like, how are you going to be able to do that? So like, what are you thinking for this? How are you going to be able to pay for those expenses? Do you anticipate any of these issues going forward? So kind of just being able to paint that picture of what a retirement could look like using the annuities and almost doing it based off the questions you ask is kind of how I would go at it. But again, I deal with you guys as my clients, right? Instead of you guys dealing with the actual clients. So I don't want to tell you guys how to do your job. I'm sure you guys are, well equipped to do it and going to be great at it. And I'm just here for, resource informationally or assistance wise for you guys in your practice moving forward.
We appreciate that so much. We do have more questions coming through. Are you good for us to keep going?
No worries. Yeah, of course. Keep going.
Okay. So William is asking about, are there requirements, underwriting, anything like that for these products?
Yep. So there is suitability guidelines, and what I'll do is I'll just actually send those to you as well with these slides. So at that point, the suitability guidelines can be pretty express out there. And so, a rule of thumb is if your client has under the $100,000 in terms of net worth, we're going to only take up to 50% of their liquid net worth to annuity premium, just to make sure that they have enough liquid net worth to make sure that their expenses are paid for. And then anybody over that $100,000 mark will take up to 70% of their liquid net worth. And then, with that, with different replacement options in different states amongst, moving different annuities or 401ks, there's a little bit more intricacies, but that's where you can reach out to me individually and kind of help out answer some of those questions as they can get pretty in the weeds. Yeah.
Yes, I love that. And I'm sure our agents greatly appreciate that. You absolutely have access to Brent. He's our life and annuity guy here at Eldercare, and you have access to Jake. And you have access to all the people to help you be able to confidently write annuities. Paxton did ask, are particular, read that one.
Are particular conversations available?
Partially. Is it partially?
I'm gonna go with partially. I just repeated what you said. She said particularly. I'm like, yeah, particular.
Are partially conversion available? Roth IRA.
So essentially.
Yes, great question. Yeah. Yep.
Sorry, Max.
Partial Roth conversions are available. Yep. Great question. There's a couple of pieces on that too I can send. And that's something to where we're seeing a lot more utilization on that too. So great question.
Thank you for asking that.
What she
question.
said. What he said. What she said. What he said.
Yeah. Does anyone else have something they want to mess me up on? Yes, this is being recorded. You will have access to it if you're not already subscribed to our YouTube channel. Subscribe to our YouTube channel. It's just at Eldercare Broker.
Yeah. Every one of these we do on Tuesday are recorded, and the ones that you do on Thursday as well.
Mm-hmm.
Yep.
Yes.
I myself go back and watch these things.
Yeah.
Sometimes I laugh at me being goofy or something like that, or looking off somewhere, but just being able to go back and revisit these webinars and everything that we talk about really helps me, because of course when you guys ask me the questions, not always going to be Johnny on the spot, but I can always go back and watch these things and really cover some bases.
Yes, absolutely.
No pun intended.
I'll go back and watch, but I leave it muted. Oh. Okay, so I know there's a little delay sometimes on these webinars. I don't see any further questions coming through. I do see a few people still on, so definitely appreciate you guys sticking through the whole training, participating, asking those questions. Greatly appreciate it. Definitely appreciate you, Jake, and the Athene team for attending and talking to us about your products. And this wasn't even all the products, right? We just talked about the
Popular ones.
What was the product?
Yeah, just kind of our number one guaranteed income.
Yes.
Yeah, 10% bonus and the performance elite. Yep.
So those are the ones that I see a lot of as well. I'll have some people ask about kind of some 15-year things and all that good stuff, but mostly I'm looking at those performance elites. Max rate as well.
Yep. And then, for legacy planning and maybe those who don't qualify for life insurance but still want to take care of their loved ones, the agility solution is what we can talk about for that too, with the enhanced death benefit.
And another thing I would like to add on to the thing, any health questions to qualify is one of the questions real fast. Nope.
So it's just going to be financial suitability at that point.
Yep. So just one of the things I would like to add on to, since I've been dealing with you guys, I know that I get a ton of information from you guys. That's what I really love, because I know a lot of times I'll get questions, hey, can I get some information? Hey, I need more than the basic brochure. And there's been so many times where I went to their website and just got a lot of information. So that's one of the things I would love to say about you guys. You guys have a lot of information. You can just build more knowledge on different products. Like I said, a bunch of different products and a bunch of knowledge to go behind it. So I just really love to say that use your knowledge or your information a lot.
Yes, yes, absolutely.
Of course.
Well, thank you so much again. I know we're way over time. Definitely appreciate all of you agents staying on here. Definitely appreciate you, Jake. We look forward to helping everyone. The agent's life selling and changes their life. I mean, these are life-changing products for sure. So definitely excited to see the results from this training.
Absolutely. Remember, annuities can
Sounds
change
good.
your life.
Yeah, absolutely.
Really
That's
can.
right. All right. Well, I will. I'm going to hop off here and I'll send you the presentation slides and some of those materials that we spoke about. But I appreciate everybody's time today. Looking very forward to working with you more throughout the year.
Absolutely. Thank you, Jake.
Awesome. Thank
Yep,
you. Bye.
of course. See you guys. Oh boy, how do I leave?